My name is Antoine. I'm the founder of a company called Cryptio. We are a finance data platform for companies building and offering digital assets products. We help them with accounting, tax reporting, and compliance reporting. We like to do events around the topics that we are interested in, which are basically like regulated crypto products and use cases. And today we're very, very excited to have conversations around payments. We have amazing panelists that represents companies that are very active in this world of payments through different angles, with different focus. So I guess that the best way to start is having you guys introducing yourself, introducing the company that you are representing today, and understanding from the start, you know, what's your role in this payment space. I guess we'll start with you, Coralie.
Thank you, Antoine. This is okay. This is perfect. So my name is Coralie Billmann. I'm part of the Circle's adventure, how we say. So Circle is an issuer of stablecoin. So we issue stablecoin in euros and USD, so called EURC and USDC. We are one of the big players in this market, and for the moment around 30 to 35 billion in circulation for USD and 60 million euros for EURC. We decided to establish our European headquarters in France recently, and we're working hard, and we'll talk about this, getting the necessary regulated licenses to issue stablecoins in a MiCA compliant way. So this is really a part of my job today. And before joining Circle, I was a long time in payments, working for 10 years with PayPal in the finance and treasury team. So basically, really going from if you think about 10 years ago, payments industry were very, very, I would say, early stage. And I started my adventure with PayPal 2013, and in euros, the e-commerce business was just started. So we definitely saw the growth and the volumes of digital payments spiking, and I think this is just the beginning. So let's talk about it later.
Great. Jason?
Hi, everyone. I'm Jason Chlipala. I'm the Chief Business Officer at the Stellar Development Foundation, which is the foundation that goes along with the Stellar Network, which is one of the oldest layer ones, one of the oldest public layer ones. We historically have been very payment focused. Stellar was very much created with payments in mind and stablecoins in mind. You know, we like to say we were thinking about stablecoins before that was really a term. The idea was be able to issue arbitrary assets, arbitrary digital representations, and especially of fiat currencies. And so have had that deep payments DNA, but since then have absolutely expanded the use cases that we're interested in. Now we'd like to talk about everyday financial services. We're very mission focused. We take our mission as to connect people to the traditional financial system through blockchain. And so that's everyday primitives like payments, of course, but savings and lending and insurance. And so those are the sorts of things we focus on. And for many years, our philosophy was Stellar is going to do a narrow set of things really well. We're going to do payments. They're going to be really fast. They're going to be really cheap. And that served us very well. And then in the last 2 years, we have been building and finally launched just last month smart contracts. So Soroban is the name of our smart contracting platform. And we're now very excited how that can certainly add to the payment story, but also open us up to a variety of other use cases. And the foundation where I'm at, we essentially try to make the Stellar Network successful through working with companies, developers, and regulators and educating them and just helping people build on Stellar.
Cool. Eric?
Thanks, Antoine. Hi, my name is Eric Van Miltenburg. I'm with a company called Ripple. Ripple is also one of the more experienced players in the crypto space. We've been around as a company for about 12 years. And our mission, we like to say, is to help enable the Internet of Value, to help make sure that money moves around the world as efficiently as data moves around the internet today. And our core focus, or at least our focus to date, has been around payments and specifically cross-border payments. We see the pain point in cross-border payments to be the most acute for a variety of reasons that we might get into during the course of the conversation today. But we're really focused on working, we're a B2B play, so we work with financial institutions largely, and we're trying to allow them to unlock the power of the blockchain. So payments being at the middle of that, but we are expanding our portfolio of offerings because we also believe there's sort of a set of primitives or building blocks that are essential. So we made an acquisition last year of a company called Medico that has just amazing custody technology. Again, another sort of fundamental building block that we think is important for enterprises looking to leverage the power of the blockchain. And last week made an announcement around a stablecoin we're going to issue as well. So it seems like a common theme, although Circle's way ahead of the game on that. I'll stop there and yeah.
Cool. Nabil?
Yeah, good morning, everyone. Nice to meet you. My name is Nabil. I work at a company called Worldpay, which is the world's largest merchant acquirer or payment processor, if you don't want to use industry lingo. We enable businesses, large and small, around the world to accept fiat payments from consumers. Last year, we processed about $2.4 trillion of payments into our various clients across pretty much all verticals. So I guess we're the traditional company that these guys are trying to disrupt. But hopefully we can partner with them before they do so, and we do partner with many of them. But my role at the company is wearing a few different hats, so leading all of Worldpay's partnerships with banks and payment networks around the world, so our relationship with the likes of Visa, MasterCard, American Express, Discover, and about 15 or 20 banks around the world that we work with to move our money. And then also leading our crypto and Web3 business. So we enable a lot of the large exchanges and fiat on and off ramps to accept card payments, e-wallets, and other payment methods. And then also lead product management and commercialization for all of Worldpay's payout products. So other than payment acceptance, we also have a business that allows businesses to pay out to consumers. So think about companies like Airbnb paying out hosts around the world, or Etsy paying out marketplace sellers. So very familiar with all sorts of payments, domestic, cross-border, digital, in-person, et cetera.
Very cool. So let's talk about all these different segments in payments, and let's focus on the customer, like the C2B, like customer buying to a merchant. And let's start with the basics. What are the practical benefits today of a merchant around accepting crypto as a means of payment? Where do you think is the main value here? Is it on the settlement side? Is it on the costs? How do you think about that at Worldpay?
Yes, I would say as we think about payment methods generally, and we offer about 35-40 today, so we don't just do cards. Typically, what merchants care about is speed of settlement, cost, and then fraud and risk. So as you think about when new payment methods come out, typically those are the factors that someone's going to think about. And then, of course, like, do consumers want to use it, right? And so as I think about crypto, the speed element is there, right? Like if you do a direct wallet-to-wallet transaction from a consumer to business, that business is going to get settled, that crypto, pretty much instantaneously. Cost-wise, depending on the network, depending on the time of day and congestion and all that, could be more cost-effective than something like a card or e-wallet, and could not. And then fraud and risk management, I think, is an area where there's still some solving to do on the crypto side. So depending on the type of business you operate, for example, you might need to know source of funds or source of wealth or whatever, and things like that. Or you might want to be able to validate that a payment method or payment instrument belongs to a consumer. I'll give you an example. So in Europe, if you're a regulated kind of online sports betting institution, most countries in Europe require you to validate that the payment method a consumer adds to their account actually belongs to that consumer. So with a card, you can do that. Visa and MasterCard and companies like Worldpay, we offer tools. So if you type in a card number, we can validate on the back end that, hey, this card belongs to Nabil. Well, if I'm a consumer and I show up with a MetaMask wallet or something, how do I validate that that wallet belongs to that consumer? And so like being able to answer questions like that to kind of meet the compliance or regulatory or risk requirements of whoever that merchant is, whether they're a sports betting company or a different type of company, is really important. And I think that's where there's some work to do.
Cool. Coralie, you worked also in PayPal before, so where do you think now that you have working at Circle, the main benefit of the merchant of accepting crypto?
Yeah, it's definitely on the, I would say, currency as well. I remember PayPal, I don't know if you're like in euros base, it's so expensive from a merchant side to use this kind of companies. And on the cross-border side, same thing on the FX, it's extremely costly. So using crypto is definitely reducing this cost, or even move to zero. I agree with you on the compliance side, and we see so much of attention from the regulator on the way we onboard clients. And again, when you think about Circle, our clients are exchanges, or we only are in the B2B business. Yeah. So, but still, we need to make sure that our clients are themselves applying some of the KYC and CFT requirements from their local jurisdiction. So it's almost on this thing that we will see the market to be even sometimes more really safe and secure than even the banking side. Because again, the requirements are so huge. Even if you think about us outsourcing some of the again, the compliance side to crypto exchanges, we need to make sure that we perform due diligence on them. They perform due diligence on their clients, and sometimes they're themselves B2B, so their businesses. So if you think about sometimes the delay of onboarding, so this is something we still need to, I would say, improve our, I would say, reactivity on this side. And we need to educate the regulator on this reliance on several, I would say, compliance steps. So definitely agree with Nabil on this side. This is where we have to go. But on the other side, if you think about, I really like when our CEO Jeremy Aller is talking about payments today using stablecoins or crypto in general. It's almost like sending you a photo. If you send a photo to your friends and family, it takes 1 second. It should be the same for money. And why it's not the case for the moment. So this is what we are in the process of putting in place. It's taking some time, but it's all about, again, having the regulatory and the compliance infrastructure in place. So a lot to do still.
Guys, Jason, something to how the benefits for merchants?
Well, I mean, Nabil and Coralie definitely know this space much better than I do. The one thing I'll add is I think it's really important that people in our industry, or there's been a maturation of the industry. I think even 3-4 years ago, people would speak about, crypto is going to replace everything. And let's take merchant payments, that this view of crypto and blockchain is like Pareto better than every other payment method. And that's just not true. Credit cards are not going anywhere. They're going to continue to exist. Cash is going to continue to exist. Other payment methods and systems, like Nabil just said, they have 45 of them. Blockchain and stablecoins in particular represent another payment method. And in some places, it's better. And in other places, it's not. And that is fine. I think we in our industry, we should take this approach that we don't need to replace the financial system. We want to supplement it. We want to make it better. We want to add to it. So I think talked about some of the benefits on the merchant side, but I know I've definitely spoken to people. They get so hyped up about this new technology. They think merchants would be idiots not to replace everything with stablecoins, and that's just not a realistic view. So I think we all benefit from taking a realistic approach to what are the real benefits of blockchain.
And I think today there is a real. Eric, you wanted to add something?
Well, no, this is going to be a boring panel because I'm agreeing with everybody, right? We don't have any spicy mixing it up. But I agree with the panelists. Maybe one thing that Nabil said that I'll disagree with, at least I'll speak for real. We're not looking to disrupt the Worldpays of the world. And this kind of goes along to Jason's point. I think the beauty of this is finding sort of the Web3 companies and finding the intersections and making the existing system better. I think historically one of the things that maybe has gotten people a little bit antsy about embracing crypto is that it was initially positioned as this libertarian, circumvent the system, kind of destroy the establishment, credo. And there's still pockets of that. But I think that created quite a bit of tribalism and kind of really sticking almost with a religious fervor to a certain position. And Ripple's always had an approach of, we want to work with regulators, we want to work with central banks, we want to work with companies and help make processes better, as opposed to sort of destroy what's there and try to build something entirely new. So that didn't make us sort of the cool kid on the block when it came to crypto. It was like, oh, well, Ripple's kind of a sellout because they're working with the system. We think it's a smart way to build a business. We think, to Jason's point, there's a lot of things about the system that make sense and will continue to make sense. It's about finding those intersections where we can actually be additive and move it in a positive direction, in a compliant way. Because without compliance, the real volume of the real money is not going to come into the system, so to speak.
I think that what you guys are doing at Worldpay of like, I think you're using stablecoin just as a settlement tool, right? Like to reduce settlement time. You want to tell us a little bit about that? Because I think it's a good illustration of how to use crypto and stablecoin just to make the system better.
Sure, yeah. So today, if you're a merchant, say you run a coffee shop or whatever, and you accept card payments, depending on where you are in the world, you'll receive the money from that purchase in your bank account anywhere from 1 to 5 days later. That's kind of standard. And of course, if it's over the weekend, you can add a few days because most banking systems don't operate over the weekend. And so what we did is we rolled out the ability for a client of Worldpay to accept payment, but then receive the settlement in stablecoin. Now, right now, I'll be honest and say we haven't done it to speed up the settlement because we still need to get the fiat to mint the stablecoin. But we are looking into ways about how could you do something like a same-day settlement or settlement over the weekend using stablecoin, because those rails operate 24/7, 365, unlike domestic bank clearing rails, which in most countries are like 8 a.m. to 6 p.m. Monday through Friday, excluding bank holidays. And in today's world, especially with rates being as high as they are, everybody wants money sooner. Like everybody's very, very focused on working capital and capital efficiency, whereas 5 years ago, when rates were, you can get a revolving line of credit from your bank for 2.5%. Nobody really cared if your money showed up a day or so later. So I think it goes along nicely with what you guys are saying is, we haven't quote unquote disrupted or rewired payments, but we've taken a technology that has benefits in a given, specific use case for a specific audience who cares about time value money more so than others, and kind of enhance the product that we already offer using the technology.
So would it be fair to say that in order to really reduce the settlement time, you will have like the payer will have to pay in stablecoin directly, right? So that you don't have this.
That's one way to do it. Like the thing you have to think about is in today's payment ecosystem, particularly around consumer payments, whether it's on cards or e-wallets or even like sending a Swift wire, there's a number of intermediaries involved, and that number can vary from 2 or 3 all the way up to 5 or 6, depending on the payment, whether it's cross-border, what type of payment method, all that stuff. And for the party at the end that's settling the money to the merchant or the final beneficiary, if they want to do that quicker, they need to get the money faster from the other intermediaries, or somebody needs to front them capital, and that costs money, right? And so us as a payment processor, could we settle all of our merchants same day? Yeah, sure, but where are we going to get that money from? Because Visa and MasterCard don't send it to us until 1 or 2, 3 days later, depending on where we are. And as much as I'd like to settle money to everyone quicker, fronting $2.4 million or $1 trillion for a couple days, you guys can do the math on how much that would cost from a lending perspective. It's not cheap. So.
Cool. And the so if we have the sender who actually pays in crypto and then reducing the settlement time, what would be, I guess that the blocker here becomes how can we push people to have more crypto, to use crypto wallets, basically?
Potentially, yeah. So I think there are payment methods, whether it's crypto or even in the UK, you have like direct account to account or bank to bank payments, and those will clear instantly. But I think, I forget which one of them said it, for better or worse, people like to use the payment methods that they like. Maybe people are used to using PayPal, or maybe people want their credit card reward points or whatever. So yeah, I think you can push people to use stablecoins, but me as a consumer, just being completely candid, I don't care when the cafe gets its money when I buy my coffee. What does it matter to me if they get their money 5 days later? I don't care. I get my coffee right then. It's like, what's the benefit to the consumer of like paying in a stable coin? I don't know, right? That's someone needs to figure out how to make that attractive for the consumer.
Coralie, how do you think about that in that circle?
I think exactly as Nabil, the consumer, we are not interested in knowing, the way the money flows, basically. It's a bit like on the internet, if you remember in the, 10 years ago, we were saying SMTP processes. All of this technology behind internet was like, okay, we're trying to understand how it works, but now we don't care. We just Google something and everything behind the scene is like, not interested for everyone. We want payments or money flow to be the same. It's like smooth. We don't care about the back end. I had a nice manager at PayPal. He was always telling to me, this is sausage making. We don't care how the sausage is made. It's just good. So, and we want money and payments to be the same. And a solution for this is to have in the same, I would say, for example, stablecoin ecosystem to stay in this ecosystem. So merchants and buyers to be staying and not converting back to the fiat, having some wallets and the infrastructure. Because even for stablecoin issuers, if you think about how do we issue stablecoin, so let's say Antoine is, minting with us, sending 100 euros. I will get 100 euros from you, and I will mean 100 USD for you. But still, there will be this fiat receipt of funds, and behind this, we need a banking infrastructure in place. And just receiving this inflow will take some time for Circle to see that we see an inflow. Then I will mint. Then I will give you the USD. Then you are going to use potentially USD and send it to another, friends. This person would like to be redeemed, and we'll see another transfer of fiat. And all of these is basically using the classical and sometimes costly and lengthy banking infrastructure. And this is where, if we think about digital money as a whole, not replacing fiat, but using fiat in a different way will be probably quicker for everyone. And we see that in Asia, for example, we have a partnership with Grab. So you probably know Grab is like our Uber Eats or really day-to-day taxi or food delivery, using only stablecoins. So not having to go back to the fiat ecosystem, because this basically transition back or to fiat. Which is painful. It's not the usage of cash. We can all use cash and it's fine. Some people, as you said, will always use cash and will always use credit cards. But it's still this change of way of payments that is the problem. So, and we want this to be smoother, and for this, people should be able to spend and use their stablecoins in an ecosystem that is large enough so that they don't need to go back to the fiat, basically.
Cool. Eric, you wanted to jump in?
Yeah, I mean, I think it's an evolution, right? This is not going to happen overnight. I mean, we've been in the business of doing this for many years. We have 300 plus customers that are using Ripple's technology to facilitate cross-border payments. And when we would walk into a financial institution, usually a larger bank, let's say 5 years ago, we couldn't utter the word, digital asset or XRP or stablecoin. It's like, we'll never touch it. We're not going to do it. Never talk about crypto. That has changed dramatically. But at the time, we weren't going to force fit it. And so we'd focus on elements of the solution we could solve. We started with solving the messaging problem. So, many people here, I'm sure, are familiar with Swift. It's been around for 50 plus years. Not a lot of change until very, very recently. And so we created a better messaging system that allowed, cross-border messaging to happen, much more quickly, highly reliable. That didn't really address the liquidity problem of you needed to, in the old correspondent banking system, park funds in correspondent banks around the world. So when a payment was made, money really wasn't moving cross borders. It was already sitting where it needed to be. But it was a hugely inefficient use of capital, right? You had trillions of dollars sitting in correspondent banking in nostro accounts, as they call them, and waiting for payment instructions. So then we used a digital asset. We focused on XRP as this bridge currency. Again, not trying to replace fiat on either side, but it's just trying to make the movement of the capital move at the same time the message moved. So again, not a replacement of the old system, well, in some ways a replacement of what a lot of Swift was doing, but it's still largely the same end user experience. And I really agree. It doesn't matter to the end user, be it a business or a consumer or whatnot, what's happening underneath the hood. It's just, if it's faster, if it's more reliable, if I can get over the weekends versus waiting for a weekday, and if the costs are lower, that's really what matters. And so it's working with sort of the established players to make sure that they're realizing the benefit of the blockchain, oftentimes without needing to become experts themselves, sort of abstracting that away and allowing them to realize that benefit is a core focus of ours.
Cool. I have one last question for Coralie, because Coralie will have to leave to very important meetings in 5 minutes. Before we move to B2B payments and cross-border payments, when we will see like the stablecoin moment, like what would be the catalyzer to see maybe do you see a world where like stablecoins are used, you know, there's like as much adoption as like Venmo or Cash Apps, or when do you see stablecoins be used in this type of payments, and when is the stablecoin moment?
I think the stablecoin moments is when the population of the retail clients are using stablecoin in our day-to-day. And this will be the moment. And there was a circle forum, don't want to do marketing, but on Monday we did organize a nice event, next year if you want to join, where our CEO was showing a slide which was really good, where we saw the adoption of stablecoins starting from really the money markets makers in the crypto business. So again, when people wanted to enter the crypto market as a trader, they were using stablecoin. This was the first use case. And gradually, this is like growing and definitely transitioning to the day-to-day usage and adoption. So we see now more like B2B business. We are partnering with Manchester United for their Web3, I would say transformation. So potentially for the supporters to buy their jersey using wallets and Web3 products. We are partnering again with Grab, with New Bank in Brazil, which is one of the biggest, again, payments and bank of Brazil. So almost half of the population in Brazil is using New Bank. For us, they will be able to get access to the USD just with their phone. So, and again, we see this adoption from countries where sometimes the reliance to their currencies is complicated. This is definitely a use case, and this is like adding to where we see more and more adoption of the stablecoin ecosystem. But again, I think it will be whenever we don't care about how we pay, that will be the stablecoin moment.
Cool. Thank you, Coralie. We'll let you go to your
Thank
point.
you. Sorry. It's the Ministry of Finance. So I apologize for the license. Regulatory is important. But, this is the key. No, honestly, it's like, without joke, this is really where we are here, and where France is such a nice, as well, country. It's because the regulatory infrastructure is so robust, and was, if you think about our industry, there was a law called La Loi Pacte. It was made in France, and we exported this law into the European world with MiCA, and again, it was designed there. And some companies like ours are looking for regulation, because regulation is a good thing for the users. It's adding some trust to our industry. So we should not blame any.
You're probably partial to France, but you should also look into Liechtenstein.
Cool. Thank you very much, Coralie. And then we'll continue the conversation. Very cool. Cool. So let's move to like B2B payments, cross-border payments. Maybe we'll start with you, Jason. If we think about B2B payments and cross-border payments, I think we can talk about like, the two at the same time. Which sectors and vertical do you think are the most suited for early adoption? And do you think about this in terms of verticals? Do you think about this in terms of geos? Like, yeah, how do you think about where it fits the most?
Yeah. Well, that last question first, sort of verticals versus geographies. I think it's very related to something Coralie said before she made her dramatic exit. Sort of access to dollars remains one of the biggest use cases right now of blockchain. Assets like USDC and Tether, which is I'm sure many people know is very large in Asia. So I think it's less about industry verticals and more about geographies. Those are going to be the ones that's sort of going to guide where pickup is. And then to the broader B2B question, I've heard from multiple people that, or rather, I do think sort of mid-market is going to be the best scale for the B2B use case. I've heard from multiple people, both in the industry and also just sort of users, that if you're a gigantic corporate, cross-border payments work pretty well for you. You call up a Citibank, you call up an HSBC, and you can move these really large amounts. And if you're an individual, not perfect, it's too expensive, it's too slow, but companies like MoneyGram, Western Union, Wise, they're not bad. In that middle ground, if you're a mid-size, importer-exporter, that's where you really run into trouble. You're too big to use a MoneyGram, the sort of classic remittance companies. You're too small to go call up the mega financial institutions. So that's where we're seeing a lot of pickup. There's a company called ARF that builds on the Stellar network, and they are essentially a liquidity provider for money transmitters. And so they lend money to these money transmitters, and they use USDC, Coralie's asset. And it works really well for them. Again, the main value is the settlement speed. And in their business, they're making essentially 1 to 5 day loans, and so settlement speed and cost is really relevant. And so that's one example of where we're seeing that. But yeah, I think it's very much that in the middle tier.
So Eric, obviously at Ripple, you're very focused on financial institutions. Can you tell us a little bit more about what are the benefits of crypto and Ripple in particular in cross-border payments for financial institutions and how the technology makes sense?
Yeah, I mean, it's echoing a little bit of what I said before. I mean, the kind of plumbing associated with cross-border payments is a bit archaic and broken. And this need to park capital around the world is cost inefficient. The inability to send payments 24/7 and get near instant settlement and certainty. Those are all issues that we tackle. And we are focused on financial institutions, and maybe echoing a little bit of Jason's point, I do think geographies are a key determinant, just in terms of where we're seeing uptake. Moving money between G7 economies, not that challenging. FX is relatively efficient. There's deep liquidity, et cetera, et cetera. But if you're going into more sort of exotic corridors, the pain point's more acute, and the need for solutions that involve crypto, I think, really gets highlighted. And also, honestly, and Coralie brought it up as she was leaving, where there's regulatory clarity. In areas where there isn't regulatory clarity around the use of crypto, I think there's more reluctance by institutions, not surprisingly, to embrace this new technology. And it's really is a barrier to things exploding. I think certain jurisdictions, Europe with MiCA, certainly is doing great things. I think in Singapore, MAS has shown a really progressive attitude to how you think about setting policy, and unfortunately, the U.S. has not. Right, has a very sort of backward perspective, has not created regulatory clarity, and as a result, at least I can speak for our business, we are not seeing as much uptake among U.S. customers, where we're seeing really, really substantial growth in other parts of the world.
So what are these parts of the world, especially in terms of volume? So we talk about regulation, And in terms of volume, like where do you see the most?
Yeah, I mean, for us, there's a couple of areas. I do think the broader APAC region is definitely a hotspot for us. Yep. In 2022, we saw 5x growth in volume of one of our products. We call it on-demand liquidity. Again, that uses XRP as a bridge currency to settle a fiat pairs. And we've invested heavily in the region. I think we've gone 5x in the number of employees over the past 4 years or so in Singapore, which is our hub there. And LATAM is starting to really heat up as a region where, again, we're just seeing certain corridors where the pain points are most acute is where customers tend to raise their hand and really embrace the solution enthusiastically.
Nabil, do you see in terms of like geographies, like do you see?
I'll take a different lens on it, actually. I think it's less about geography and vertical and more about the type of payments you're doing. So I think it's for companies that are doing low value, high frequency cross-border payments. So let me explain that. So if I'm a big corporate and I need to send a few big wholesale payments every day, or maybe a few dozen, I'm happy to use wires because like I'm probably sending payments that are in the several $100,000 to several $1 million range. And if I'm sending that much money, I probably don't mind paying $2 per wire or whatever, right? Especially if they're between developed economies where you have an efficient FX spread, not too expensive. But if I'm, let's say, Twitter or TikTok paying out all my, whatever they call it, commissions or royalties to hundreds of thousands of influencers on my platform on a daily basis, and those payments are, $20 or $100 a day, then that cost of transacting becomes extremely high, particularly if I'm paying out across borders, so if I'm not using like a domestic clearing rail. So those are the types of businesses where we've seen really push us and approach us and say, hey, what can you do to bring down my cost of sending payments? And where stablecoins have become interesting because they are, generally speaking, cheaper. I don't know if you guys are familiar with these, I forget what they call themselves these days, employer of record companies like Remote and Deal. Well, basically, they'll be the employer to hire your contractors overseas where you don't have an entity or don't want to employ them directly. They're doing a lot of stablecoin payouts because they will pay these contractors typically weekly or a couple times a month, and they'll originate the payment from the US or UK or Europe, but the contractor might be in some far-flung exotic destination where the FX is really expensive and the payments are very slow. And so they offer the ability to that contractor to accept USDC typically, and there'll be some sort of cost benefit for the contractor because whatever deal or the employer saves, they'll share some of that with the contractor. So the contractor will be like, hey, yeah, I'm happy to get 2% more on my wages if I accept it in USDC rather than paying the 2% FX conversion that my bank's going to charge me when the wire hits. So I think, high frequency, low value is where I see interest in stablecoins. It's less about geography and vertical.
Yeah, I would agree with that. And beyond stablecoins, even as we use other bridging currencies like XRP, the low value, high volume is a mantra we've been playing. The one exception, though, I'd say we do see our customers using it for what we call a treasury use case. Mm-hmm. Either I'm a multinational, I need to go fund payroll or pay suppliers around the world, especially when there's timing issues, i.e., the 24/7 aspect of this is interesting, especially, this country has a bank holiday on a Friday and I don't, and I want to move money there and I'm kind of stuck. If you can be using crypto rails instead, you open up possibilities. So I think there are still kind of the high value payment scenarios that will find this attractive.
Interesting. Maybe last question, maybe we open to the audience more on the blockchain infrastructure side. Obviously, we're getting like uptick in usage for L2 and like also new protocols coming out with fees that going on. Like how do you think about the impact of blockchain infrastructure, the improvement of blockchain infrastructure and the speed and the cost would have on payments, both in terms of cross-border payments or C2B payments? Like how do you think about that? Maybe Jason, obviously.
I don't know how much really the L2 question relates directly. I mean, of course, any technical improvements are going to have the potential to improve things like payments. I think I mean, I can tell you so as I said in my introduction, we added smart contracts this year. We chose not to kind of go the L2 route, which is what some others have done. We also chose not to build on the EVM. Our view is that Ethereum and kind of that entire L2 structure is a little kicking the can down the road. You know, the L2s don't really fix the underlying technical issues. So we chose to sort of build our own thing, and we almost felt we had kind of a last mover advantage. We were able to see the mistakes had been made and fix those or address those. You know, nothing's perfect, but actually address them. So I don't know that sort of the deep technical details are that relevant to kind of payments as a use case.
Nabil, like, how do you think about the L1s and protocols that you will leverage?
Yeah, I think cost is a factor, but costs in payments today are already generally quite low. But let me explain why, because some of you will probably disagree with that. So domestic payments in most developed countries today are extremely cheap. Like FedNow and RTP in the US, which is rolling out, the base fee from the Fed or TCH is 5 cents, I think. And there's a lot of rebates going on right now because it's new. That's pretty cheap to be able to send payments up to like $1 million or whatever the limit is. And then if you talk about cross-border payments, they're expensive, but it's typically not the per transaction click fee that's expensive, it's the FX spread, because somebody in the chain or multiple people in the chain are taking currency risk. So using a protocol instead of a legacy bank clearing rail doesn't solve someone having to take currency risk on either side, right? Which is the bulk of the cost of the cross-border payment. So I think, like, yes, to the extent that let's call it the infrastructure cost or the per transaction click cost can come down, that's good, but in most developed economies, it's quite low, particularly if you're a scale company and can negotiate those rates pretty aggressively. Until someone solves the FX currency side, and maybe a little bit through speed with the blockchain you do, that's what I think will be a bigger driver for folks. And so as we think about like, hey, what protocol should we use? Yeah, the gas fee is a consideration, but I wouldn't say it's like a top 3 criteria for us personally.
Eric, you have something similar?
No, I mean, faster is better, cheaper is better. So yes, but I would tend to agree at the margin. I mean, so XRP ledger settles in seconds. It's 1/10,000th of a cent per transaction fee. It's fast. I mean, yes, marginal improvement, great, but I'm not sure that's the long pole in the tent on this one.
Cool. Maybe last question actually. What are you the most excited about in this cycle in terms of payment? Like, what do you think is next for payments in the crypto space? Eric, maybe.
Well, we, as I mentioned last week, we announced that we will be launching a stablecoin on the XRP ledger and actually on Ethereum network as well. So we just, again, for reasons probably already mentioned, on and off ramps are important. I think it'll continue to be important into crypto, and stablecoins play a huge role. It's a huge market. You already mentioned $150 billion mostly between Circle and Tether, but projected to go up to almost $3 trillion within 5 years. So given that, there's room for other credible players to come in that take a very compliance-first mindset. And so for us, we think that's a really exciting evolution. And we're looking forward to launching before the end of the year.
I don't know if it's the thing I'm the most excited about, but I did, another use case that we didn't really talk about is public funds. So governments and other public entities making payments. And so I do think that's another really important use case for blockchain and stablecoins, because there's an interest in a certain amount of transparency. If you're a government agency, knowing that the payments you've made are actually getting where you want them to go. And so, for example, we at the Stellar Development Foundation, we work with the UN High Commission for Refugees, and we help them to make payments to Ukraine and other conflict areas using USDC. And so I do think that's a really important use case and will grow, because a lot of there are technical aspects, or there are features of blockchains that sort of an everyday merchant might not really care about so much, but a public entity really cares about.
Very cool. Bill, what are you most excited about?
We're paying a lot of attention and have a lot of excitement around the CBDC space. It's interesting for us for a few reasons. One is that typically, not always, but in many countries, if something is deemed legal tender, then merchants have to accept it. And if merchants have to accept a legal tender, then their payment provider needs to support it. So it actually has like implications for us if it becomes legal tender in many of the markets that we operate in. And then I think like we talked a lot about how retail adoption of wallets and stablecoins, et cetera, is key to a lot of companies in this room or the overall ecosystem being more successful. Well, I think actually a government-provided kind of CBDC is a very trustworthy way for people to dip their toes into the technology. And if they get comfort through that, then maybe they're more willing to use private versions of similar things, whether they're stablecoins or other kind of blockchain-based tech. So we're paying a lot of attention to it. I think it's really exciting that the ECB rolled out a $1.3 billion or euro tender to further develop it. Obviously, that's like a 5 or 7 year program, but governments like to waste money, but $1.3 billion is a lot of money to waste on something that you're not taking seriously. So that signals to me they're taking it pretty seriously.